Hello and welcome to the look ahead for Thursday, the 2nd of October, with me, Fiona Cincotta, Senior Market Analyst at City Index. So the main focus tomorrow usually would have been jobless claims, factory orders from the US, and the challenger job cuts. But because of the US government shutdown, which at the time of recording is still in place, there are certain data points that won't be released tomorrow because they come from federal agencies. So factory orders and jobless claims will be two of those releases that will be affected. The challenger job cuts will be released. Now, obviously, this data comes, or should I say more importantly, the shutdown comes at a time when the economy and the Federal Reserve are at a key juncture, with whether they're going to be cutting interest rates further as far as the weakening of the job market is concerned, as far as inflation is concerned. Non-farm payroll report won't be released on Friday, will be likely delayed, as well as inflation data next week if the shutdown continues. So basically what this means is that the market is not going to be getting that information that it needs in order to decipher what the chances are of the Fed cutting interest rates. And the Fed's not going to get that data either, making it very difficult for them to really take policy decisions. They will be, in effect, flying blind. Now, we did get ADP data payrolls through today, really supporting that narrative that the US jobs market is weakening. We saw that the ADP payrolls fell by 32,000. That was defying expectations of an increase of 50,000. We also saw a downward revision to August's data, down to a fall of 3,000, as opposed to an initial expected rise of 54,000. Now, here we go. We're just going to be looking here at the S&P 500. Just bear with me. Oh, no, sorry. Here we are. So this is the S&P 500, very much still trading in that upward trend in the rising channel. This is definitely not a derailing of risk that we're seeing. In fact, we are seeing that US stocks are recovering higher, and that's probably got something to do with the ADP payrolls coming in significantly weaker, supporting that narrative surrounding more Federal Reserve rate cuts. Just as far as levels to go, we're just a touch off the record high of 67,000. That's the level that buyers are going to be looking to move above in order to bring 68,000 as the next logical target into view. Now, let's also just take a quick look at gold, which is trading at fresh record highs today, boosted again by this uncertainty surrounding the shutdown of the US government, as well as expectations that the Fed will continue cutting rates. Central banks also still buying up. There seems little reason not to be, or seems little reason to be selling gold, should I say, at this time. The only thing to be watching out for, this is seriously overbought, so we could see some consolidation. Although bullish momentum does actually still seem quite strong at the moment. Levels to be watching on downside, 3,700. That's the next level to be watching on support. Below there, I'll be looking at around the 3,620 again. But, we don't really see this uptrend negated until we get to the sort of 3,430 levels. Just finally, just going to be taking a look at the US dollar, Japanese yen. Now, US dollar is falling against its major peers, but it is especially falling against the Japanese yen. We can see that really bearish engulfing candle. We're testing here key levels at 146.70. That's a level that has been tested previously. It's also where we've got the 100 SMA, sorry. We've already passed below the 50 SMA, and below here we've got the 146.30 level. That's the next real level to be watching for a break below. If we get below that, that's going to create potentially quite a deeper sell-off towards the 145 level. This is a mixture here between obviously this weakness that we're seeing in the US dollar, the government shutdown hurting the outlook for the US dollar, but also the safe haven Japanese yen getting some flows, as well as those expectations surrounding potential rate hikes from Bank of Japan at some point in the future. So that is everything from me. I hope you've enjoyed what you've seen. If you have, then please do give this video a like. And for more videos like it, then please do subscribe.